Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. All right, it's been a while since we've done one, so let's just jump right on in. So we're going to start off with the dollar just like we used to. So looking at the dollar, what are we seeing? So finally, after pretty much years, we have broken the range, right? So we have broken the range between essentially this blue zone here, which has just been a zone of support and resistance. If you go back in time, you'll see price will have tested this area as resistance, and then as we overcame it back in 2022, we had held it as support essentially since 2023, and we bounced between the blue zone and the monthly bearish FEG. We finally, over this period from 2023 to 2025 in January, filled out that monthly bearish FEG and rolled down. And now we find ourselves trading below the blue zone, and we just tested it a couple times here as resistance. However, are we going to just break down from here? Probably not. We have a good chance of at least testing maybe one more time, potentially, but overcoming this zone as resistance and then breaking back through and then continuing this range is less likely for a couple of reasons. Now, looking at it from the chart, technically, this is going to be likely just a resistance retest back at 100, maybe even back at 102 if we get just short-term strength in the dollar and then a roll back down. But as we get closer to the next FOMC, the next rate cuts decision, which seems to be very likely going to be a 25 basis point cut, that will only weaken the dollar more. So we'll likely see a continued move back down under 96, under this low, to eventually get back up to 94. Now, once we get to the weekly uptrend here, we're likely going to get either a large consolidation over a period of weeks to months, or we're going to get a nice jolt of demand in the dollar. Now, will be demand meaning like everyone wants dollar? Not particularly. As the U.S. cuts, you'll see the increasing rate of cuts in the other foreign currencies, namely the euro, the pound, and the yen. Potentially, the yen may have one more rate decision of either raising rates or holding rates, but they will too soon follow cutting rates, especially if the US begins the process. So when that happens, you'll see a lot of those currencies weaken faster than the dollar. So you may get a short-term spike up from this area because of that, or you may see just a consolidation here for a period of time, essentially creating another range on top of this support area. Okay, so dollar, prepare for weakness, but be prepared that it won't just waterfall down, or it's unlikely to, because you'll have other currencies that are going to weaken faster. All right, let's go over to the Dow, the Nasdaq, and the S&P. So starting off with the Dow, we had an incredible move up on Friday, very powerful. Broke through the consolidation here, essentially broke through the highs, and now we're back in trend mode. I mean, it's been a very simple game here. Just trade with the trend. So, if you're not in the Discord, you'll find the link down below. Discord's free. I do have premium services, but most of the Discord's free, and I'm usually live all the time, and it's usually for everyone. So you can hang out there if you haven't. We talk about all these markets all the time, and we've just been trading it. Just trade up. So just, if be on the long side, be on the buy side, it's been paying out pretty well. Markets have been pretty simple over the last, let's say, couple months to maybe almost a year now, but mainly a couple months. And we're just going to continue in that direction. So just wait for consolidations, look for breakouts to the upside. The trend has been very, very clear, and the Dow is telling you to keep looking for that. So prepare. We're going to probably see a move towards 46,000. Maybe we'll slow down as we approach September for the next rate cut, but we'll have to see. My opinion may change, like if Monday or Tuesday, maybe even as late as Wednesday here, if we get a harsh rejection, maybe we have some dojis and then boom, harsh rejection, I'll look for much lower, going back to like the 42s, maybe even just like the 40s on our way to the rate cuts. But if, we have continuation tomorrow, on Monday, and pretty much the rest of next week, we're just going to be looking for moves to 46, and it'll be really interesting. It'll be a really unique moment in the markets, because usually when you're approaching rate cuts or the rate cuts are starting, you have you have pullbacks. But as you can see, we're not really getting much of that. Now let's go over to the NASDAQ. Take a quick look at that. NASDAQ, unlike the Dow, not breaking highs, as the NASDAQ and S&P had already broken highs. They had a nice little pullback, but very good recovery so far, bouncing off around the 50 moving average here, still surfing that moving average and coming back into equilibrium between the 10 and 20 moving averages. So a lot of demand in the market. NASDAQ is not implying major continuation for tomorrow, but the Dow will drag everything up. So we'll see if the Dow gets that continuation. If it does continue higher, you'll see NASDAQ eventually take out the high. And again, just back in price discovery. Like, it's just up. S&P, very bullish. Still hasn't taken out its high, but reflecting the Dow a lot closer than NASDAQ. And again, if we have a really strong start to the trading week, starting Monday, just look for S&P, make new highs. Incredible. And then if we go up to like the 5-day and the monthlies, these all look great. They all look really strong, especially the monthlies. Like they're all just screaming uptrend. Nothing has changed here. It's really impressive to watch, and you would expect weakness coming into the market as we're talking about rate cuts, but no. We're not there. We're not there right now. So right now the bias has to be short-term upside, midterm upside, and long-term upside. That's just how it is right now. The painting will change, next week, and we'll see what happens. All right, let's go over to gold and silver and then oil. So starting off with gold, you can see with gold, really interesting contraction, nice symmetrical triangle. It's going to make a decision this week. Likely to the upside. Now the probabilities aren't huge in either direction. They lean towards upside, but when you have these sort of triangles, they can turn a distribution really fast, and then you break down. And the breakdown again is just a normal pullback. Doesn't mean it's going to top here forever and break all the way back down in the 2000s and all that stuff, but it can lead to that. However, the probabilities are going to lean towards upside, an upside move. We're talking closer to 55, maybe 60% here towards the upside. But it is a very mature, extended triangle. So, it's not super impulsive. If we do break up from here, it implies, especially after like a bullish retest, if that all validates, it implies a very sustained move up, kind of similar to what happened over here, right? Very sustained, very likely to last a long time to the upside. So again, all you can do is wait and see. Our decision in direction is going to be made this week, this coming week. It's very, very likely. Let's go over to silver. And silver is actually starting to break this little range it had here. But if gold is going to, let's just say, be slow for most of the week, I could definitely see us stop here and then pull back again between Monday all the way up to like Thursday or Wednesday, and then look for a higher low to come in if we're going to stay bullish, and essentially make a little mini contraction on silver. If gold's going to break out real early, maybe it's going to break out tonight when the futures open, or it's going to be Monday or Tuesday, silver may just end up popping up here, right? And this is all you got. So silver looks good. Silver is not as bullish as gold, but that's to be expected. But it is looking really good to come back into the 40s, and then we'll start seeing where silver can get. And then let's talk about oil real fast. So oil's been really interesting to watch. So kind of similar to dollar, where it's starting to lose a pretty major zone here that it's held for years. But unlike dollar, oil is not going to trade as freely. There's a lot of fundamental incentive for it to trade in this blue zone between $60 to like $80. And I don't foresee that really changing right now. Everything looks really stable. Had a nice overextension to the downside, quickly recovered, respected the trend line, came back, and now is respecting the bottom, the blue zone. I would actually look for this to come back into the 70s. And again, look for it to kind of stay stable. Again, there's a lot of incentive. Now, if war stuff starts to, break out more, then maybe that'll change stuff. But as of now, everything's starting to look like it's stabilizing. You have the Ukraine Russia war is looking like it's honestly being negotiated to come to an end. Obviously, the Middle East has cooled down a bit compared to where it was just some months ago. And a lot of other little minor wars all around the world have been coming to an end, or at least some sort of agreement where there's pauses. The only conflicts I see that are still threatening oil price to, maybe pop up really hard, which is, maybe Ukraine, Russia, maybe those deals don't go through. But also there is seemingly some more, aggression coming from the U.S. towards Mexico and greater South America, specifically Mexico and Venezuela. So we could see some operations take place soon that will cause oil to spark up, maybe here and there. But I would quell any major upticks, like we're going back up to like the hundreds or the 200s or anything like that for now, because Trump has proven to be very good at holding oil price down and relatively stably, and Saudi Arabia seems to be completely on board here. So I don't really think you're going to see oil price go too crazy, especially before I move on. The higher oil price is, the more Putin, the more Russia is going to be rewarded to go to war. So if they keep the price down and stable, it makes it more costly for Russia to continue the war. So there's a lot of incentive to keep oil pretty much where it is right now. They don't want it. They're probably not going to want it back towards the 80s or even a little bit higher than that. So oil will probably stay stable, barring any like black swan events. All right, let's go over to Bitcoin here. So I know it's been a long time since I've done a recap. I've been in a Bitcoin swing for a long time. I mean, we've taken majority of profits off. I've been in a bunch of cryptos for swings for a long time, but a lot of these are just running. Majority of profits are out of them. For Bitcoin specifically, taking out, we did two partials off of this, and I have like a quarter of the position in, I think, around there. And the trend has been pretty strong now since last time we've actually looked at it. We've made new all-time highs, but we've actually made, I would say, our first potential top here. Now, when I say top, I'm not saying top of the market where we're going to now go into a bear market. I won't call that. I don't know. There's no money in trying to call that. But I will say, just looking at price, you have a pretty standard swing failure pattern here. High here, slight high here, rejection, and now taking out this low here, testing, making a lower high, and then rolling back lower. So I'm looking for a move maybe around 105 to even potentially 100 flat. Now, 100 flat is okay as long as we hold there or show major demand. If we start taking out 100 and then start taking out this low on the daily, it opens the door to some real heavy downside, going back down to like sub 90. Like, you were talking like the mid 80s to even like 77, 79, that area. Now, that's not the most probable path I have for it right now. For me, my most probable path is actually kind of split in two, because I'm not too sure yet. It's a little too early. It's either we flatten out here, okay, where we're going to actually pop up again here and make another lower high, and we start to flatten out over time, or we're going to have a repeat of this over here where we had a nice swing failure here, and then we kind of pull back hard and then grind down, which is essentially we do this, swing failure, pull back hard, and then grind like this, which means we'll kind of stay around the 105, 108, maybe like even stab towards like over here like 102, 103, but start showing a demand in this area, and then eventually lead to continuation. That is what I'm leaning towards. It would go hand in hand with the rate cuts, because again, Bitcoin, though it's not always one-to-one with the traditional market, if you cut rates, you're printing more money. It would imply, at least just how everything worked with supply and demand, you get more dollars. That means that dollars eventually get weaker. Bitcoin denominated in dollar goes up against the dollar. That's just how it is. It doesn't mean it's going to be immediate, but this would kind of mirror that that outcome. So this is the most probable path I have here, which is similar to here, similar to this kind of consolidation here, this kind of pullback here, but not as big. It would be shocking if it became as big as this one. I don't foresee that. And if what I'm looking for does happen, I would then look for continuation higher, going towards like 160, 150, 160, potentially even higher. But we'll just say 160 for now. Now, if this ends up being a top, and like a significant top, and it gets real bearish, look for a move down towards 100,000, and if it starts taking out 98, depending on how the price action looks, we'll have to start diagnosing for this turning into a real top and potentially a downtrend beginning. All right, so again, the best way to go about this stuff is not to impose your bias on anything. Let price tell you. It won't move that fast. It'll move fast short term, but then it'll come back, and it builds stuff. So don't feel if you're feeling like jumpy, don't feel jumpy. Just let price do its thing. You can look at past consolidations and see how long they lasted. You have plenty of time to diagnose things. Like right over here from this high to the breakout over here, you had 50 days. Over here, it's even longer, right? From this high here to the breakout over here, you had 90 days. Okay, that's 3 months. Like, you have plenty of time. Don't feel like you have to make any decisions fast. Price action will tell you. If you can't read it, that means you should ignore it, or you need to start studying charts some more. But if you know what you're doing, you can't read it, just ignore it and give price more time. The picture will become clear. Well, that's it. That's it for the recap. I'm gonna try and get back into the routine of doing some recaps throughout the weeks. I want to try and be consistent, one a week. But if you're not in my Discord and you watch this YouTube video somehow, I am a lot more active in the Discord. Again, you'll find the link down below. I'm pretty much talking every day or doing streams every day. But for YouTube, I don't really like repeating myself in these videos, so I won't feel the pull to keep doing videos. I'll try and do one every week. But if there's not much action, then there's not much action. Okay. Sorry if I cut there. I don't know what happened, but if I did, again, said I'm just gonna be trying to be consistent with the videos. One a week is my goal. One a week. All right, guys. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.